This communication was prepared for educational purposes only and should not be construed as investment advice. All opinions or views reflect the judgment of the authors as of the broadcast date and are subject to change without notice. Julius Wealth Advisors, LLC, is a registered investment advisor. Our disclosure brochure, available at advisorinfo.sec.gov or through contacting us, provides further detail about our business, services, and fees.
By Julius Wealth Advisors.
All right, welcome to episode 7 of the Big Bo Show. I'm very excited for this show. If everyone recalls from episode 6, I talked about the concept of keeping it simple, but I also mentioned that I was at a friend's house and there's a gentleman there, I'll call him a gentleman, that made me lose my appetite by the way he thought about investing, equating it to gambling. So I decided to invite that individual onto the show just to understand this and talk with him and gain his perspective and to have a little banter. So with no further ado, I'd like to introduce you to Maury Litwack. Maury, how you doing?
Jason, I'm excited to be here.
All right, awesome. So
where's the big intro? Is it like rock music coming in? Are we gonna have that in there?
I usually put rock music in during the intro. I put that in the sound. My brother is actually in the music industry, so he told me I needed to do that. That was something he was very critical to me about. So I started to do that a little bit and taught myself how to do this.
But am I gonna get like WWE music, like Andrew music, like Undertaker music?
I'll give you the Undertaker. All right, awesome. So I'll give you some of the Undertaker music for that. That's going to be great. So before we get started, I'll let you give a brief description about yourself and introduce yourself, and then we can get into it. So give the audience a little bit of a brief background of yourself. Take it from there.
Yeah. So my name is Maury Litwack. I'm friends with Jason, and I'm a nonprofit executive. And so I've done I have a big background in advocacy for nonprofits and lobbying on behalf of nonprofits, but also in terms of fundraising, in terms of trying to raise money or capital, if you will, for nonprofits as well. So I consider myself in the business of raising our voices and advocating for good causes and giving people an opportunity to work not just for their business, but also in communal work and communal issues and things they may care about. So that's my passion.
Love it. Fantastic. More, I think I told you this when I was first meeting you, but it's interesting. Maury actually moved into a person's house that I got very friendly with during COVID. We used to actually, me and another buddy in the neighborhood, used to sit in your backyard, socially distanced, of course, and sometimes it was freezing out, and just sit and talk, have a couple drinks together. So that's how I first knew Maury, and then I got to know him a little bit better, and it was very interesting. I think it was the second or third time we met at another buddy's house, and he came up to me and he said, "You know what, Jason?" Something along the lines. He goes, "You know what, Jason? I like you." He's like, "We've met a few times, and you're probably one of the only people that I've ever met that never asks me what I do for a living instantaneously when they meet me or just meet anybody." So I thought that was very powerful. I mean, that's typically just something I do just because I want to just get to know someone first. I try not to, judge people or whatever. I don't know what people do when they ask that question, but I'm just trying to understand someone who people are as a human being first. But when you said that to me, I was just trying to understand a little bit from your vantage point, why that was so important to you.
Well, I think the problem in business and in life in general is that people make immediate reactions. They sum people up almost immediately. First impressions matter. 180 characters, 140 characters, whatever it is. And I think that it's a welcome relief when people are more focused on sort of who the individual is and sizing them up based on, giving them a chance and opportunity. And I saw something, I think it was on Twitter, I really liked, which is someone said that we should start, instead of asking people what do they do, well, let me rephrase it. People said that the comment was, when asked what do you do, instead you should say, I'm a father and I'm a person who likes my synagogue or my church or whatever it may be. Talk about your values and things that you do, as opposed to immediately saying I'm an accountant or I'm a lawyer or anything else like that. So even I'm guilty of it, because when you asked me what I did, I gave that my background organizationally, instead of saying to you like, well, I'm Jason's friend, or I'm here's my background, who I am and what I'm about. And so it's just so common to do that. And so I literally just demonstrated it on the podcast.
That's funny. Yeah, no, that's interesting. That's an interesting comment. I personally just always observe that in my personal life. Like, just when you hear people, especially for many years working on Wall Street, and everyone on Wall Street always tries to size people up, and I was I guess anti that, right? Like, I didn't really love that culture, that environment, and it's just like, listen, who you are as a person initially, right? And if someone could understand who you are as a person, like, why does it matter what you do for a living? And also, when I'm working with people, like, I try to tell them that too, because, I mean, for what I do, I'm obviously intertwined with a lot of people's personal finances, and most people, when you see on the surface, everyone always tries to keep up with the Joneses or something, if you will. And I personally think that's something that's a disease, if you will, in our country. And at the end of the day, like, I always talk about if you listen to the show, is that there's two statistics that I always talk about with people, is that, most Americans live paycheck to paycheck, and then also the percentage of millionaires in this country hasn't really increased in 20 years in a real basis. Like, the percentage has increased, but if you strip out inflation, then the percentage actually has stayed flat. So if you just look at those numbers, kind of tells me that most people are in the same situation. So it doesn't necessarily matter what you do. It's really kind of how can you help someone out to propel them forward. So that's kind of like why when I meet someone, I don't really care what they do for a living, because most people are in the same boat. So what does it matter? So let's get into it. So as I said at the beginning of the show, when we were hanging out a few weeks ago, we were enjoying a nice meal at a friend's house down the street from us, and a couple of conversations came about, and you and a couple other people started relating investing to gambling, and I stopped eating and kind of just kept my mouth shut, because usually when people get into those conversations, it doesn't end well if I try to butt in, because I think that's probably how most people think about investing, and that's why I think most people also have a very tough time creating wealth, right? And that's also why, like this morning, I had a call with a client's daughter, 18 years old, first going to college, because if you can get to someone when they're young and try to change or shift their mindset, or when you're younger, your mindset isn't forced in already, it typically helps out. And that's what happened to me, right? With my grandfather, with Julius, he taught me when I was young, and so I didn't really know any other way, right? So from your perspective, I guess I just want to understand, why do you create investing into gambling, and assuming, right, maybe it's a big assumption, because human beings are typically who they are from their past, right? You must have had some sort of personal experience that shaped this view. So I just want to understand this a little bit more and take it from there.
First off, I want to correct the record. I don't remember Jason losing his meal over it. I think he still had a number of good items and food and things like that. He definitely didn't dispute it, and he had a look on his face like, we're gonna come back to this. So he handled it very tactically, and it was good. Like a gentleman.
Really fast. Losing my appetite is a lot different than the normal person losing their appetite. I'm still going to eat the same amount as an average person, but not 2 to 3x.
God, okay, all right. I just want the listeners to believe that I cost you a meal or something like that. I think it's exercise and self-control. I think that where the comment came out the most is I think it really reflects the current sort of inflationary period and the rise of it. Right. And for myself, look, I'm not in the business world. I'm not out there making widgets and things like that. So certainly I don't profess to have any sort of business expertise when it comes to these things. But I will say that the current environment is a funny one, which is that 2 years ago, you look at the stock market and everyone who's doing meme stocks and riding meme stocks is making tons of money. A year later, everyone in Bitcoin is making a ton of money. This year, everyone's losing a ton of money. And so the conventional wisdom out there is exactly, that's why you have to put your money into an index fund. Right. So, okay, but you put your money in an index fund, and index funds have lost 10% or 20% over the last year. So then they say, no, well, you don't put it in the hands of someone like a Maury who doesn't know what he's doing. Go out there and, for example, just put your money into your 401k. But when I look, if I go look at my plan, I've been advised by CNN and all the media, don't look at your plan right now because it's a disaster. But wait a second, I was told that that's where I put all my money in. Yeah. So I didn't go look at my plan because I knew it was going to be a disaster. But I was literally told. And so it feels like when you look at options trading and when you look at hedge funds and you look at all of the people who are in that system, it just feels a little bit like Vegas. And it feels a little bit like Vegas in the sense that when you go to Vegas, they always say the bookmakers make the most money. They know. They don't look. The house doesn't lose, right? The sharps, they call it the sharps. The sharps don't lose in Vegas and betting, right? And it's the same thing here, which it feels like there's a group that isn't losing when they're making financial investment, and it feels like there's another group. And I think for a lot of people, it's that. Now, in terms of, I just want to give you the personal story. Now, for me, a personal story is when I was first. I didn't grow up with any money. I wasn't someone who grew up. I would say I didn't grow up with any financial planning advice or anything else like that. I didn't have a grandfather who taught me like yours did, and it sounds amazing. But so I grew up with none of financial planning, and so when I was first married, we had a close friend who gave me financial planning advice and convinced us to put my wife's money and his into 2 different plans. And after a year and a half ago, later, literally, I checked into plans and they were a disaster, and I canceled one of the plans. And after that, we went and found another financial planner and had a similar experience where it wasn't going up as much as we'd like. Right. And it seemed, and I think I understand the fact that you have to find the right people to do wealth management and financial planning. But I think more often than not, I think that we end up having these experiences and they give us that jolt. Right. And so I have these 2 sort of directions, Jason, that one is the personal direction where I tried to be responsible and did it and it blew up in my face. And the other is literally what feels like the daily betting. And you have index funds that are betting for, and you have bears and bulls. But then we're not supposed to believe that this is a market of where there's a degree of gambling going on. So this is sort of how the viewpoint I had. Now, should that be should that be my viewpoint? You tell me. I'm here. I'm open-minded.
All right. Well, that's key. Being open-minded is key. So you said a bunch there, and I wrote down a few different things. I took a little bit of notes as you were speaking, and I'll go down all of them. Right, sort of from the beginning to the end of what you said. So the first thing you started saying is that I don't have any business mindset and I don't make widgets, right? Something along the line. And that's an interesting way to start the conversation about investing, because when you invest, that's exactly, in my opinion, well, not opinion, it's actually facts. That's exactly what you're doing. You're literally investing in other people's businesses, right? So if you think about it that way, for example, you're not recommending companies, or just giving an example. You're literally, if you're buying Apple, you're buying a piece of Apple's business. So you don't have to know how to make widgets. You own the business, and the people that are running the business need to know how to make widgets or make an iPhone, right? You're buying a piece of Microsoft. You don't need to know how to code software. I have no clue how to code software. but you don't need to. The people that are at Microsoft need to know how to do that, right? So right from there, I think that's when I talk with people and they always use the word the market or similar words to gambling, the first thing I like to try to do is to get people's right mindset. And it was very interesting that you talked about widgets, and that's exactly what you're doing is you're investing in other people that make widgets, right? Widgets are products or widgets are services. That's what you're doing, right? So I thought that was very interesting. And you kept on using the term the stock market, which is what a lot of people do. So you're not investing in the stock market. When I say the word the stock market to you, what does that mean?
To me, that means like, I think for those who are not in day-to-day finance, it means like, it almost has a feel sometimes of like roulette table. Like it means like, hopefully it's up today, hopefully it's down, who knows?
Right.
Like it has that feel many times for those who aren't educated. And I'm probably a perfect example of like why you should teach personal finance.
Right.
Because that's my viewpoint of it.
Right. So now if I said the word Apple to you, the company, what does that mean to you?
It means like a serious business.
Okay. So you see how when I asked you what the term the stock market means, you struggled for like 30 seconds to come up for an answer, and I asked
Well, I was
you
trying to make you not lose your lunch again.
No.
The viewers can't see. There's a whole buffet here. We're just trying to see at what point did we stop eating here.
So the reason why I bring that up is because the term the stock market, it's an intangible thing.
Right.
And that's why I think people get themselves in trouble, because there's no such thing as the stock market. It's an intangible being. But if you say, Apple, or you say Microsoft, or you say Nike, immediately, well, that's a business. It's a great business. They make shoes. They make iPads. So if you think about it, is that all you're literally doing is going to a marketplace that allows you to buy pieces of other people's businesses between 9:30 and 4 every day, except the weekends. That typically helps people frame things and make it tangible, make it real, right? It's just like you're holding a hat. That's tangible, that's real. Things that are intangible, that people can't feel, see, or touch, it makes it a less, harder for people to actually gravitate and absorb the concept, right? So that's the first thing that I always try to teach people, and that's like, I tell people to do behavioral coaching. That's the behavioral side of it, is that in order to, in my opinion, create true wealth, most of the time what's wrong with people is their behavior. It has nothing to do with are they a great investor, or are they great at financial planning. Most people, your behavior is going, in my opinion, going to be your biggest determinant of success or failure, right? So and then you started to go off on various, what I would call different philosophies, where you started to say, you went to one planet, they told me one thing, went to another person, they told me to do another thing. Then you watched CNN, so basically you're talking about 5 different philosophies, right? And what I have found, since I've been doing this since I was 10 years old, is that there's only one philosophy that matters, and that's yours. The one that you can stick with, right? Meaning that no matter who you talk to, they're probably going to tell you something different. Some people are going to tell you something that's like totally fraudulent, maybe, or totally bogus. But if you understand it and you can relate to it and you can stick with it, that philosophy, if you stick with it for 30, 40, 50 years, should work, right? Where people get themselves in trouble is when they listen to 10,000 philosophies, right? Like I tell people, even though I'm a Dolphins fan, which we'll get into later, I'm a big Tom Brady fan, right? And one of the things that he always talks about is blocking out the noise, right? Because people will talk garbage about the Patriots or the Buccaneers or about Tom Brady or about whomever. But for him, that's all noise, because he knows what he's doing and he knows that he's going to win if he sticks to his game plan, right? So when I hear you speak like that, and it's not just you, it's everyone. Like I hear people want to tell 1,000 different ways to slice how to create wealth. It doesn't matter. What matters is what you think you can stick with and what the philosophy you believe in, right? And ultimately block out the noise of everyone else. And similar to when you said when we're eating, is that I didn't like totally lose, but like you said, I handled it very gentlemanly because I was blocking out the noise. I was like, all right, like I'm not going to be able to change their opinion here, but to me, there's all noise, and there's no point of getting into this banter because I understand my philosophy This is their philosophy. From my due diligence that I've done, this philosophy they're talking about historically never works, right? But to me, that was just noise. That
well, I mean, I don't know if we even have a philosophy.
Well, so that's the thing, is you need to, work with someone or yourself or do due diligence. Like I tell people, knowledge. I have three core values: integrity, knowledge, and passion. Right. So knowledge, you need to gain. Someone needs to either take the time with you, or you yourself need to gain the knowledge to understand a philosophy that works and why that philosophy works.
It reminds me of civics and the importance of teaching civics in the classroom, because people don't vote in America.
Right.
And so we always say that people have to learn it, learn it earlier in their life in order to teach it. Similarly with personal finance,
100%.
like I'm like a product of someone who didn't learn that.
Right.
So I'm always telling people we've got to it's very hard, because adults will say, I'm not voting this election, I am voting this election. I don't do jury duty, I am doing jury duty.
Right.
Which is different philosophies like you're talking about.
Right.
It's funny how our expertise and the things that we care about, we are dedicated. Like in my own job, I would never behave the way I would with a personal finance, which is 100% shifting philosophies and moving from. I think those of us who don't understand investing and don't understand that are constantly moving from thing to thing and trying to sort of figure it out, because we were never taught it in the first place.
100%. Yeah, and that's why a huge goal of mine, or something I'm very passionate about, is people need to learn. And I think I talked about this one of my earlier shows, maybe the first or second show, is that we don't teach kids financial literacy in school, right? Like most kids go to, the average education in America is through high school, right? And sounds to me like you never took one personal finance.
Not once.
Most people never have. I was just interested.
So what do I do now? What do I do? What's the thing? What do I do?
Yeah.
Other than listen to podcasts, what do I do? What's the first book I read?
Yeah, so I would say the first, for me, I've always been a big Warren Buffett person, right? The first book I read when I was either 13 or 14 years old was called The Warren Buffett Way, right? Because I just started to understand his philosophy and who he was, and I read it, and it made intuitive sense. And a lot of it was which we'll get into what you said also, is that how Wall Street operates. Like, number one, that you're buying a business, and number two, that in order to create wealth, the biggest thing you really just need, which I tell people, is time and a whole bunch of discipline. And that's how, if you think about how Warren Buffett made his money, that's all he did. He had a bunch of time. If you look at a chart of how Warren Buffett created his wealth, I might be a little bit off here, but most of his wealth was created after he was 60 years old, right? Because compounding wealth, it's not linear, it's exponential, right? And that goes into, like I tell people, if you have $1,000 and you make a 10% return, you made $100. If you have $1 million and you have a same 10% return, you made $100,000. That's why creating wealth is exponential, right? Which goes into you talked about, like, when you said that you were working with someone and the returns weren't what you were expected, so you abandoned it, right? So that goes into like expectation management, right? And really understanding, like, you're starting here's A, right? Or for me, I'll give a football analogy, right? I played football in college, as you know, and yeah, you might have gotten the ball at the 20-yard line, but how are you going to get a touchdown? Odds are you're not going to get it on the first play. You might have to run 10, 15, 20 plays, 3 yards in a cloud of dust sort of philosophy, but your end goal is to score a touchdown. And then what different sub goals do you need to create to get that touchdown, right? So that goes into expectation management. And I would also say knowledge, because like, what were your expectations when you don't have to answer this, is like, what were your expectations when you first went into that whatever the person set up for you versus what you actually received, right? Because if you were expecting, call it a 20% return, and the person you were working with was expecting to get you a 6% return, and they got you a 6% return, you were expecting 20, well, there's a difference there. They didn't think they did a bad job. You thought they did a bad job. Probably where everyone did a bad job was expectations. Right? Because at the end of the day, and this goes into sort of what you said, like, you said it's like Vegas, like, this is one of the reasons when I used to work at, a few major Wall Street firms, and I got, used to get kind of disgusted working there because people need to sort of understand how, here's a really good book to read because it says it, I think, in the first chapter. The book is called Margin of Safety by Seth Klarman wrote it, right? There's only a few hundred copies made, but you can find a version on it online. So he wrote this. This is also what I experienced. If you understand how Wall Street works, and this is also if you read about Buffett and Munger or actually lived it, Wall Street only works if you do. They only make money if you do something. Right? Doesn't matter what you do. You just have to do something because they're typically operating off a spread. You buy something, they make a spread. You sell something, you make a spread. You do an M&A deal, they make money. Right? So that's why you have to wake up when the market's down. They're going to tell you why it's going to crash. When the market's up, they're going to tell you why it's going to go up more. And then someone else is going to come on and tell you why it's going to go down. Because people just need you to do something.
So what you're saying is CNBC is the most unhealthy thing in your opinion.
Not to bash CNBC.
They're not sponsors.
They're not sponsors.
Go ahead, go nuts, Jason.
Yeah. So I tell people the worst thing you can do is watch financial news.
By the way, Jason's all of the lunch has been thrown over the podcast. Buffet is over. Lost his meal again. It's been a disaster. I mentioned CNBC and food just went flying everywhere.
Yeah, so I agree. I mean, I tell people that the worst thing you can do is watch CNBC. Sometimes, like you see, I have a little iPad set up. Sometimes I watch just to see what's going on, but I have it on mute.
Which is similar. Again, it's similar. There are some. I think there are. I think you made a very reasonable argument. I accept your argument. I accept that what you're saying. But I do think that there are some elements of things that benefit from a culture of, like you said, CNBC benefits from a culture of up and down, similar to what ESPN does from benefiting from a culture of creating spin around the media. So I do think that for the average person without financial education, including myself, you can understand why that's the appearance.
Of course.
When we're sold that these are financial planning things, and analysts are pivoting. I mean, on a given day, I think you could argue that you look at CNBC and looking at ESPN, there's a lot of similarities.
All right,
in terms of the spin.
So let's bring it back to business, right? So CNBC they're owned by Comcast, which is a business. They're a publicly traded company. ESPN is owned by ABC, which is owned by Disney. Businesses, right? So they're businesses.
We should gamble with these companies.
No. So what they are both in the media business. How does media make their money?
By selling, I am the customer. I am the product.
How does fundamentally a media company make their money? How's the only way they make
advertising?
Advertising.
Right.
So you can't go on CNBC and sound boring. Like me, I probably sound pretty decently boring. I mean, I try to be entertaining, and people who know me, I'm kind of a jovial oaf, whatever. But like, if I just came on and just like said these basic things, you think people are going to tune in?
By the way, the podcast is called Jovial Oaf. I think you can just dump off immediately.
So maybe I should change it to the Big Oaf Show.
Exactly.
So, but that's how they make their money. Same thing with ESPN. If they didn't have to come out with spin and try to tweet out and be the next guy and claim all these sources and this, that, and the other, who would watch? You could tune in to watch a baseball game or a football game. But when you're 24 hours a day, you're not playing baseball at 3 a.m. So you need to create the news. You need to create the news because who's paying them? Who's the companies that are advertising on their station. They don't make money. They actually spend money to pay for the NFL rights and the baseball rights. So if they're spending money to get these rights, then you can't have only expenses in the business. You need to get revenue by selling advertising dollars. Right, so that goes back. Bringing it back even to investing, you have to understand. Like I always tell people, when you have a problem, people always like try to jump. So like understand the root cause of the problem, or the root cause of what's going on.
The root cause is probably just the meal. The meal wasn't our standards. It wasn't my lack of financial understanding. Probably that was the root cause at the end of the day.
Right, exactly. So that's the, I think, going back, it's like that, I think to me, that's the root cause of why a lot of people in this country, the numbers never changes. It comes back to knowledge and it comes back to education.
Yeah,
We want to thank Maury Litwack for coming on to the show for his entertaining and enlightening discussion. And we apologize for some of those technical difficulties at the end. We'll be right back after a quick break to wrap things up with some key takeaways from the show.
Growing up, Jason Blumstein had been accustomed to a life of financial struggle and frustration. His grandfather, Julius, took the time to teach him the difference financial literacy can make. Since then, Jason has Julius to thank for pulling him out of the mud and pushing him to become educated, empowered, and independent. We want Julius Wealth Advisors to do the same for you. At Julius Wealth Advisors, we're committed to continuing the legacy of literacy and learning. Advising is much more than simply telling our clients what to do, it's teaching them how to do it. Our emphasis on client education is founded on the fact that we've seen its benefits firsthand. Our lives and our firm are built by the tools wise friends and family members have passed down to us, and our passion is to pass these tools unto you. Please call us at 201-289-9181 or email at info@juliuswealthadvisors.com to take your first step to be empowered to live your best financial life.
All right, so let's wrap things up in episode 7 of the Big Bo Show. Hope you enjoyed that show, brought to you by Julius Wealth Advisors. Feel free to get in touch with us at 201-289-9181 or info@juliuswealthadvisors.com. So let's go through 4 key takeaways from the show and our fantastic interview with Maury Litwack. The first one is the importance of learning about who someone is first, not what they do. And the reason for this is because from my experience in doing this for many years, many people are in a very similar boat, no matter what they do for a living. So let's try to have some compassion, some empathy, and understand who someone is at their core, why that is more important than what they actually do for a living. Number 2, a simple, at least in my mind, a simple mindset hack of thinking of investing as simply owning a piece of a business to help resolve this endemic of thinking of investing in the quote-unquote stock market as gambling. Let's get rid of this mentality, folks. Number 3, the importance of finding a philosophy that you understand, which will allow you to block out the noise, like Tom Brady, and stick with it. Find your philosophy. And part of discovering that philosophy, at least for me, is the 4th takeaway of a couple valuable books that I've read in my life. The first one called The Warren Buffett Way, which I first read when I was 12 years old. That was the first edition. My understanding now, they're on to edition number 3. And the second one being a book called Margin of Safety by Seth Klarman. These books were highly influential in shaping my view and my philosophy in my personal finance and investing journey. So with that said, let's wrap up episode 7 of the Big Bo Show. And as always, feel free to get in touch with us at 201-289-9181 or info@juliuswealthadvisors.com. Also online at www.juliuswealthadvisors.com. And as always, I want to remind people to live a life in integrity, live a life of obtaining as much knowledge as you can, and always live a life of passion. Until next time, folks, all the best.
Thank you for tuning in to the Big Bo Show.
Let's take a little flower and turn it into a tree. 'Cause we're harnessing the power that has been passed down centuries. Life in a game, fortune and fame, you're gonna win over time. Julius Wealth Advisors.